Hello, everybody. I hope you guys are having a fantastic day. The FDIC is a treasure chest of knowledge and data, and they keep data about pretty much everything. The FDIC keeps data on banking, and they actually do quarterly reports when it comes to the banking system in the United States. I'm going to leave a link to the full report down below. It's around 33 pages. If you are invested in banks, then I highly suggest that you read through the entire report, but I am going to give you a quick synapse for my specific video. I have two different bank positions. One is SofiBank and one is Truist. In this video, I will be concentrating on SofiBank. I will probably be making another video when it comes to Truist. If you guys are unfamiliar with what SofiBank is, it is a bank for the internet. They do not have brick and mortar locations, and by not having brick and mortar locations, they can be extremely lean. Also, SoFi focuses on a younger group of customers trying to hold your hand throughout your entire life. They go after young people like the millennials, and actually over 50% of their customers are under the age of 35 years old. They want to try to give you student loans or refinance your student loans, which is then going to lead to auto loans, which is then going to lead to mortgages, which is then going to lead to personal loans, which is then going to lead to refinancing, so on and so forth. And this is how they literally extract as much profit as possible per each customer. They start really, really small, and the thesis is we're going to grow our relationship with these people as these people, these customers, are going to grow their own relationship with the world, and they're going to prosper and hopefully make a lot of money. And when you make a lot of money in the United States, you need loans, you need credit, and you take out loans, and then you invest in yourself, and you grow as a person and as a businessman or woman. Besides for doing that, because they are an internet bank, they can cast a net from east to west coast and get as many customers as possible. And I'm going to go over their growth in detail in this video, so sit back, relax, and enjoy the rest of this video. The banking sector has been losing deposits for 4 quarters straight. In this report, it covers quarter 1, so it's going to cover the collapse of SVB Bank, but it does not factor in the collapse of First Republic Bank, so please keep that in mind. Total uninsured deposits are down 6.3%, north of $6 billion, while insured deposits are up 2.5%, over $250 billion. Altogether, between the uninsured and the insured, we are actually at a 2.5% negative deposit rate. Not all deposits are equal. Some are insured, some are uninsured. By insured or uninsured, we're talking about the $250K threshold from the FDIC. Now, 90% of SoFi's customers are under the threshold of $250K. Most of them are actually under $25,000 in their accounts. So this is actually healthy for SoFi. Remember, SoFi is starting small with the smaller customers, and they're going to keep increasing. By being an internet bank, they have a much larger reach. So even though their depositors are depositing smaller amounts, they can actually increase their business by going after quantity, not just, or lack thereof, quality type of customers, which I'll get back to in just a moment. Besides for the uninsured and insured type of deposits, there's also interest-bearing and non-interest-bearing accounts. Interest-bearing accounts is actually up 2.5%, while non-interest-bearing accounts is down 1.6%. This is very, very important. Why? SoFi actually offers a very, very attractive 4.2% savings account rate. Even their checking account, I believe, is like 1.3%. Now, there are some conditions that apply, but this is very, very nice to attract the type of people that are currently the depositors in banks. You see, as there's weakness in general in the banking sector, there is strength for SoFi Bank specifically because they are trying to do things completely different. If you guys think that I'm full of shit and just throwing numbers out of my ass, let me give you actual factual numbers, I'm going to be talking about two things: the total amount of members or customers for SoFi, and I'm going to be talking about the total amount of deposits for SoFi. I'm going to actually go back since 2020 to give you some numbers to show you how aggressively SoFi is actually growing compared to the rest of the banking sector, which is usually just flat, or after these collapses, they're going down. But SoFi Bank is not going down. They're actually having some of their best years ever, and 2 out of the 3 of their main products is actually on the decline. You see, they make a lot of money between personal loans, student loans, and home loans. While personal loans are absolutely going bananas, up, baby, home loans and student loans is actually going down, baby. Now, SoFi is growing over 40% year over year, and they're projected to grow between 27% and north of 30% in 2023. And they're doing this with only one of their 3 main loaning products. If you think that that is, something to just laugh about or overlook, you guys are sadly mistaken. This is very, very important to understand, because if they're growing during bad times, imagine what they're going to be doing during good times. Let me give you some more statistics. In Q1 of 2022, the amount of deposits in SoFi Bank was $1.5 billion. In Q1 of 2023, they now have over $10 billion. Between the last year of $1.5 billion to $10 billion, they're growing over 40% compound annual growth rate in terms of deposits. Mind you, this is during a complete banking collapse or banking turmoil following one of the worst catastrophes of our lifetime called COVID. Imagine, during a really shitty time, SoFi is able to grow. These are factual numbers, factual deposits. So you might say, well, Adam, that's great. They're growing their deposits, but the deposits are really small. And to this, I'm going to say they're also growing their user case. They're also growing their customer base, their users. And remember, every single customer is a potential to knock it out of the park between all of their loans: personal, auto, mortgage, refi, student loans, so on and so forth, not to mention many other products to come in the future. In Q1 of 2020, SoFi had 1 million users or customers. By Q1 of 2022, they doubled it to 2.2 million. In Q1 of 2022, they nearly doubled it to 3.8 million. And in Q1 of 2023, they now have 5.6 million users. That is a lot, but it is still small compared to many other banks. SoFi is growing in quantity, and eventually they will grow in quality. That is the bull case scenario, the thesis when it comes to SoFi. Their reach is extending, and their product offerings are getting larger, extending, expanding, so on and so forth. Not to mention the products that they're currently offering, for the most part, are slowing down, but the bank itself is still growing. Imagine what's going to happen when everything starts picking up, for example, home loans and student loans. Recently, the debt ceiling was passed, and the student loan moratorium, where people no longer have to pay their student loans, is coming back on track. People will have to pay for their student loans. If people have to pay for their student loans, they have to go somewhere for refinancing or pay it up. SoFi lost a lot of money and is actually doing 50% less student loans and student loan refinancing than since before the pandemic started. They're somewhere around north of 500 million, and they were doing over $1 billion before the pandemic. There's a lot of money and influx that's going to go to SoFi. Despite all of that, they are still able to grow based on the numbers that I gave you. And despite many other banks that are not growing or slowing down, SoFi is absolutely on a tear. You see, they had a negative 16 cents per share earning just a year ago. They brought this down to negative 5 cents a share earnings. They're projecting to be GAAP profitable at the end of this year, Q4. It's possible they're going to be GAAP profitable in Q3, which is definitely going to make the price of SoFi absolutely freaking explode, far beyond, in my personal opinion, than the price already exploded. And for anybody that's unaware what GAAP profitability means, it's literally called Generally Accepted Accounting principle. This is when you're showing that you're actually making money as a company. And for such a young company to get to GAAP profitability so fast, especially in this crazy legacy banking system, doing something completely different, wow, that's beautiful. I'm going to keep saying this, and people are not getting this right. Eventually, SoFi becomes a big bank. Eventually, SoFi will offer a nice dividend. That nice dividend is going to be a percentage based on the shares that you bought today, on the price that you paid today. So in the future, SoFi can offer 2, 3, 4, 5%, let's say, dividend payment. However, if the price of SoFi in the future is going to be $20, $30, $40, whatever, you're getting a dividend percentage based on what you paid today at $6, $7, $8, $9, so on and so forth. So your dividend payment can be in a double-digit dividend payment for the rest of your life as a cherry on top for investing into SoFi. Now, I am not a financial advisor. I'm not qualified to be a financial advisor, nor would I ever want to give you financial advice. This is my personal opinion and breakdown about SoFi compared to traditional legacy banks based on a report that came out from the FDIC, which I will have a link down below. Besides for that link, I will have a link to my Twitter account. And if you would like to buy me a cup of coffee for all my hard work, I have channel membership down below. It's $3 a month. YouTube takes $1. I'm left with $2, and I will buy myself a coffee. Thank you very much for everything. Please leave me in the comments down below what you think the future for SoFi holds. Have a great day.